All right, it's Monday, October 12th, 2020. And this is your weekly look at the latest Altos Research data that came in over the weekend for the entire US real estate market. Each week, Altos tracks every home for sale in the US, all the pricing, the changes in pricing, all the supply and demand. And we make these analytics available to our customers so that you can see the trends in the US housing market far before the traditional data providers make it available. So into the data this week. We're just about at the end of our little October transaction window before the holidays. And interestingly, the market is behaving in some ways pretty normal for the season. Inventory is falling at normal rates weekly. Our active inventory of available homes dropped 1.4% this week to only 555,322 homes on the market. We've been hovering at about 41% fewer homes on the market this year than last. So new stuff is coming on. The market is at a decent clip, and it's getting absorbed. So when I say this is normal, I mean that we're not getting more abnormal. The relative difference between this year and last year is staying pretty constant at this 41% fewer rate. Normally, the fourth quarter sees inventory contract each week at about the pace that it is doing so right now. So this is why we can see that we will finish the year at under 500,000 homes on the market. And of course, we'll see what 2021 brings, but we'll start the year at severe shortage of homes to purchase. It's likely to stay record tight until something in the economy changes. So most importantly, we keep our eye on mortgage interest rates. Like rising rates is the scariest factor for changing the market, although maybe it'll be a helpful factor if it gives us more inventory to buy. Demand keeps staying super strong too. So as prices are holding up better than they normally would at this time of year. Median price this week ticked down to 351,900. But you can see that's elevated at a time in the third and fourth quarter when prices are normally ticking back. We expect the relative strength to continue through January 15th, while taking a little bit of steps back in November and December. We're at 8.3% higher. Home prices are 8.3% higher than last year at this time. And that's how you can forecast the fourth quarter to finish up the year of 2020 at about 8.3, 8.5% higher year over year. The price of the newly listed cohort also ticked down a little bit this week to 317,500. That's the blue line on this chart. Normally it's pulled way back and hasn't at all this year. New listings is where you can really see the organic levels of demand out there, where the homes get listed at a higher price because the sellers and the listing agents know the demand is coming. So it is out there. So they don't have to discount at listing to get the transaction to happen. So we'll see if November demand stays unusually higher, if it takes a breather a bit for the holidays. I kind of hope it takes a breather to prevent overheating, let us feel a little more normal. When we talk about overheating, the Mortgage Bankers Association this week actually reported that credit standards are at a 6-year high. That means that all this demand is actually not artificially stimulated by like weak lending standards like it was going into the bubble for multiple years, 15 years ago. So at that period, demand was stimulated by easier loans, less documentation, lower down payments. In this time, down payments are higher, credit standards are higher. So that means the loans getting done now are actually better quality than they were even a year ago or 2 years ago, 3 years ago. So this is actually really good signs that it means that we're less likely for a crash in 2021. And if you watched our webinar last week, or if you've been listening to us, these weekly videos, or seeing the other stuff we're writing, you'll know that we're of the view that absent some real striking change in the economy, which could happen, real changes, spikes in mortgage rates, for example, we're unlikely to see a lot of foreclosures, a lot of short sales, distress sales happen in 2021. We remain in that position. When you look at, for example, the mean days on market, the average days on market, the time to sell a home, this is where we usually see demand. It's unusual this year because we see demand continuing well beyond normal into the fourth quarter. You can see that the third and fourth quarter each year usually have rising time to sell. That makes sense. There's fewer buyers, there's lower quality inventory. This year, though, every week our inventory is turning over more and more quickly. Probably that's because the stuff that's been around for a long time, that pre-pandemic was on the market for a year, those types of properties are now getting snatched up still. So days on market, average days on market continues to fall. I don't know when this changes. Usually, this trend, like this, our unusual trend here has been clear since July. So maybe November we start getting back into normal increasing days on market. But average days on market is one of those leading indicators that there are so many buyers that we can already see that prices stay elevated into Q1. So that's the data this week. As always, visit altosresearch.com for the full details and the latest data. You can subscribe to the YouTube channel here and to make sure you get these videos first, other videos as well. If conditions change that make our forecasts change, we cover them here first. So make sure you stay on top of it. Please, as always, post the comments and questions in the comment section below. If you have a view on the market you'd like us to explore, we're starting to get some good conversation there. So I look forward to much more next week. As always, love you.